Hi everyone, today let's talk about the union deal finally getting ratified, then we'll look at the data, then we'll take a quick look at some charts, as well as my results for the day and my thoughts going into the Monday session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So union workers finally ratified the UAW Ford deal, and this is after the GM deal was also ratified, so it seems like this is finally coming to an end. Again, they didn't get everything they wanted, but they did get a pretty significant uptick in terms of pay, and a lot of these companies have already come out and said that they're offering non-union workers early retirement packages in order to basically slim down on costs, and they've also announced plans to automate more of their factories as a result of this. Definitely interesting to see how this is going to go forward, but for the time being it seems like they've come to a solution, and we'll see how this plays into their profits and earnings for the next several years. They also mention here that Stellantis and GM did approve their deals by narrow margins here for GM, but overall everyone has approved and it does look like it's finished. Moving over to Eurozone CPI, everything was in line with expectations. Building permits slightly better than expectations. Housing starts also better than expectations. Atlanta Fed GDP expectations were worse than expectations. Interesting. Seems like the consensus is that the economy is slowing slightly, and this is another piece of data that supports that. Moving over to Max Payne, what an interesting finish. Max Payne finished around 435, stock price 450, not quite at the top of the puts, but just above this call strike 450, right in this kind of dip low, where most of the puts ended up worthless. You can see the vast majority of them here were worthless. Put call ratio 2.33 at the end of the week, very high. Total options 4.5 million. The question is what happens next, and we'll take a look at next week's Max Payne on the Sunday video. Moving over to the charts, taking a quick look across just a couple of charts before we go deeper on the Sunday video. You can see no change to the ranges here. We continue to hold above this 448.74 level, and we have now seen almost all of the short-term EMAs on the hourly chart consolidate around this 450 level. Again, we tested the trend line here, touched it, and then held that level on the daily chart, but momentum stepped down for 2 days in a row here. We haven't seen that in a while. Last time we saw that was here at this previous consolidation before we saw a very significant dip low and then created a lower low off of that consolidation. I don't necessarily think we're going to see that kind of move, but a pullback, fill some of these gaps would make sense to me, especially now that there are less options in the market. Again, we'll look at Max Payne for next week in the Sunday video, but overall no change to the levels, and it does look like a stall before a breakdown in my opinion. Moving over to the NASDAQ, very similar thesis, 4 days in a row in this same range. We did try to get above it on Wednesday and then broke back into the same range, and we are still holding here now. You can see all of the shorter term EMAs on the hourly chart have consolidated right around that 385 level. You can see it here on the daily chart, 4 days of price action. Again, if this gaps down even as early as Monday, that could be an island reversal. Again, just like the SPY, we had 2 steps down, overbought conditions. And in terms of momentum, it does look like a similar consolidation here, except we are flat on price action. Momentum rolled over for 2 days. Price action stayed in the same range, and then we eventually broke down, just like we saw on the SPY. And if we get something like that, you got the 21 EMA sitting all the way down at 365.73 on the daily chart. Moving over to the Russell and the Dow. The Russell was actually the strongest on the day, rallied really aggressively in the pre-market, about 1.5% overall throughout the day. Momentum still technically bearish on the 4-hour chart. We're above all the EMAs and SMAs again. If this holds here and then breaks down, that's going to be a lower high setup, which is not a great indicator for the bull side. In terms of where we could pull back to, the 200 SMA on the 4-hour chart sitting at 173.61, and then my level here 172.60. So basically the same thesis as yesterday, just looking for that lower high to establish now instead of the follow through off of that dip yesterday. And then looking at the Dow, same as the SPY and the NASDAQ, sideways chop, holding this trend line. Can't get above resistance, momentum bearish, RSI bearish, and you would expect a deeper pullback into the Monday-Tuesday session. Moving over to Apple and Tesla, Apple continues to hold right at this resistance. Technically, it's above it at 190. My level was 189.96, so you could say that's basically on top of it, in my opinion. Momentum, basically zero, so that is a melt up at this point. We're seeing slightly higher highs and slightly higher lows with no momentum, RSI overbought. These are typically pretty hard to trade for me, because it's not really showing strength and it's not rolling over either. Looking at Tesla, threw a big wick to the downside in the pre-market, ended up rallying off of that move. Elon Musk said some crazy stuff yesterday. People are not liking that, so he had the sell-off. Then we ended up holding at 232.57 when we got above it here in the pre-market, and then held above it all day today. In terms of levels, still watching 232.57 as a critical point. If we're above it, we can look bullish. If we're below it, looking more bearish down to that 55 EMA at 221.45. Moving over to staples and discretionary. Staples sold off a little bit. You can see that opening candle was down pretty substantially. We're below the 9 and 21 EMAs, but still above the 200 and the 55 EMA. Overall, still a short-term bullish trend, and as long as we hold above that 200, you can say this is still bullish in my opinion, and we're just in a shorter-term pullback, continuing to establish higher lows and higher highs. Looking at discretionaries, similar thesis. Coming off a high, as long as this holds in this zone above 166.78, then we're bullish. If it dips below that level, then we're watching for 162 down at this previous top. Moving over to the dollar, it did exactly what we thought it was going to do. Came off of that resistance, came down to the 144 EMA. It's now holding at that level. I would still expect a test of the 200 at 103.61. I also have a level at 103.64. So right in this zone, I think we're going to go a little bit lower at least before we find a base. If we dip below these, however, next level for me is right around that 103, and that would be a very bearish change of structure here. We're still making lower lows every time we dip here, but we would be below all of the EMAs and SMAs on the daily chart. Last time we saw something like that was quite a long time ago, right in this range where we crossed the 200, and we went significantly lower from there all the way to these dip lows here in January of this year. So watching this area critically right at an interesting zone. If this holds here, which it absolutely could at the 200 and rallies up, then we should see a little bit of selling in equities. Moving over to the volatility indices, both of these went lower here today. Bearish momentum on the MOVE index, selling off on RSI as well. We also broke this support level on the VIX. I didn't really think that that was going to happen. I thought we would probably hold this lower trend line, but now we broke below it. We're back in the middle of this consolidation. We'll see how that plays out. It might take a little bit longer to formulate this momentum. And you can see the last time we had a move like this, momentum was fading through here throughout September. Price action was really choppy, and then we eventually culminated, got a step of bullish momentum, and we shot up from there. So we're still waiting for this to rally into that bullish momentum slightly. You can see right in that same zone, we got a cross above the SMA on RSI. All of those were indicators to the bull side. We're not quite there yet, but it does seem like we could get there within a couple of days. Moving over to my accounts, I did actually lose just a little bit of money. It says I gained a little bit, but I decided to pay just to roll out this 376 call out to 377. Just a little bit of money on that. Now I have $11 credit at 377, so max profit would be 378 on that position, which is about $3 higher than we are currently. That's on 200 shares, so that would give me about $600 potential profit if we were to rally up and close above that max profit. But remember, because this is a covered call, as long as we close above 377, I do realize that max profit either way. And then on my 379 calls here, I didn't do anything with those. I really want to get out of that position. I do think we're going to see a little bit more downside next week. I know I've been saying that for a while here, but we are in a consolidation coming off a massive rally. Things don't go in a straight line forever. And I think we might have got propped up a little bit by Max Payne, even with Max Payne sitting all the way down at 435 on the SPY. I do think a little bit of short-term negativity is going to come through next week, but I do think it will establish a higher low and we can look for a rally off of that next base. Let me know down in the comments section what you think of the UAW deal, and now that everyone has agreed to it, what's going to happen to these companies going forward from an investor perspective. Definitely going to be interesting to watch, and will they expand out to Toyota and Tesla like they said in their comments? Otherwise, definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.